Hey guys, thanks for tuning in to another episode of Nuggets News. And today we welcome a special guest, and that's Robbie Barwick from the CC Report. So, how you going, Robbie?
Good, thanks, Alex. How are you?
Good, thank you. Thanks for joining us today. We've got so much to get through in relation to the cash ban and how it's possibly extending to crypto. A few other things that are going on in Australia that we want to get to. But for those that haven't followed your work, who are the CEC and what are you guys trying to do?
All right, CEC is a political party. Actually, we're in the process of changing our names to Citizen, for election purposes, to Citizens Party, because we have a sort of a slightly obscure name. Otherwise, people don't automatically assume we're a party.
Yep.
But we're quite successful. We've been going 30 years. We started in Queensland in '88. So different, in terms of what we're going to discuss here today, things like the cash ban, etc. Different people have different motivations. They're concerned about personal security, etc. Our concern. And the CEC is affected by all that. But our concern as a movement is to promote policies that bring back good governance and for the good of the country and for the economy as a whole, right? So ours is a policy position. And we see things that like these bad policies that are coming out is desperate attempts to keep propping up a bad system instead of reforming the system. And so we're fighting the bad policies so we can bring forward positive policies to reform the system.
Yeah, and it's becoming clear that a lot of those policies, they haven't been implemented in Australia to the degree that they have overseas in terms of QE and negative rates just yet. But we're seeing evidence now that central banks admit that, geez, maybe this didn't work and it did lead to inequality. And that's all the stuff I'm assuming that you guys want to help prevent in Australia.
Oh, absolutely. We didn't have it to that extent only because, unlike every other country in 2008, the property bubble crashed. Ours was propped up and kept going and actually boomed even more, doubled in the 10 years since. And when you've got a bubble, there's a lot of extra credit going into the economy, and that's doing the job of QE. Well, that's really been sinking in the last few years, right? And so now our central bank, like the other central banks around the world, equally desperate, and they're seriously looking at these things like QE, negative interest rates, etc. So, yep, and you're going to have all the negative consequence of that. And it's time when you get into this position, for the layman, Alex, I'm thinking, oh man, people think when they hear about something like negative interest rates, oh, this must be some special thing that superstar central bankers with PhDs can only understand. I don't get it, and that's because me, I'm not one of those experts. No. You don't get it because it's nuts. It's nuts in any universe. This is crazy. When you're in that position, when you've gone that far down the rabbit hole, right, it's time to reset the system and recognize how that is fundamentally broken, reset the system, and that's what we've got to push.
Absolutely. And I think anyone that's been watching our content and Martin and John had sort of got their head around these concepts and how crazy they are. But the topic we want to dive into is the cash ban. And we got the second half of the bill that we hadn't seen yet recently. And it actually extends to cover more crypto or an on-off switch to include crypto very quickly, doesn't it?
Yes. Now, this is interesting because one of the things that's happening with crypto, which I'm only just beginning to learn about, crypto is not something I've paid that much attention to. In a sense, I come at it from a completely different standpoint in the crypto community. I understand my sense with crypto, with people getting into crypto, is part of the motivation is losing any trust in the current system, losing any trust in the government, losing any trust in the banks, and that I fully understand. Our job as the CEC is to try and reform the system so people can have that trust in it again, right?
Yeah.
That's what we're trying to do. But I've been shown some examples with crypto where you can see how this is a really efficient way to transact, and in a way that is independent of the banking system, right, or mostly independent of the banking system. And of course, the drafters of this law, that's what they don't want. They don't want anyone independent of the banking system. And what they've done is they've said in the law, so I've got the explanatory memorandum here of the bill, and it's in the explanatory memorandum, not in the law.
Yep. And
that's important because they're foreshadowing something. And they're basically saying this, that in this section, actually people can look it up themselves if they want. It's page 9 of the explanatory memorandum, 1.31. While digital currency is included in the definition of cash, given ways in which digital currency is presently used in Australia, it is expected that the Treasurer will exempt most transactions involving digital currency from the cash payment limit. This exemption is expected to continue until such time as the use of digital currency changes and it presents a material risk of facilitating the same sorts of avoidance of obligations currently facilitated by physical currency. In other words, if there's enough of it, if it grows to the point there's enough of it, right, then we will this is key. All they have to do is remove the exemption. So that it's exempted under the regulation. That there's a law that bans all cash transactions. There's a regulation attached to that law that exempts a whole bunch of things. This is exempted under that regulation, and if crypto grows too much, they'll take that exemption away.
And the reason that's probably more scary for someone like myself that is immersed in the crypto community is that, you've been able to pay any bill in Australia with crypto for 4 years now, and it's actually quite easy for anyone to pay each other or goods and services. So maybe it's just the regulators not actually understanding that this is kind of already, fairly prominent in a good system. So once they learn about it and go, oh, geez, there's lots of people doing this every day, maybe they do crack down on it straight away. So that's
later, sure. Well, I'll tell you what, if this law passes, they're going to set off all kinds of problems in the financial system just by passing this law. There will be a lag between the law passing and it coming into effect. They risk a run on the banks. They risk driving more people into crypto, and then they could quickly do that straight away. I'm just starting to, like I said, to learn how widespread crypto is. Someone just shared with me videos of transactions over phones, etc. In fact, because it's becoming an issue, the CEC, we've just made it possible people can donate to us using crypto for the first time. That's just literally this last weekend we set it up.
Yeah.
So that can happen because people are saying, I want to donate in crypto. Oh, well, it's hard when you're a political party, you never turn down.
Yeah.
whether it's in LD bags or not, No, we do. We turn down the LD bags.
Yeah.
You need if people want to donate, well, okay, we'll take that donation. So and it's quite efficient. It was easy to do, right? And the government could find that they trigger a run into this, and they'll quickly crack down on it.
Well, Robbie, after we finish this interview, I'm going to send you some Bitcoin and show you how easy it is as well. So what I wanted to dive into now was the reasons that they're putting forward. And what we actually see, there was a good report out recently that the black economy in Australia, in terms of OECD, it's not actually that bad at all.
No, this is grossly exaggerated. So Melissa Harrison has done, she's in Perth, she's done brilliant work on this. She's put up this excellent website, exposingtheblack.economy.com. Yeah. Now, I had read the Black Economy report, but I'm very busy and I had just sort of did my normal speed read. I pulled out all these terrible things I saw. Melissa went through it with a fine-tooth comb, and she did cross-referencing, etc. And what she's come up with is brilliant. So it's all in that. It's really worth going. It's not a very big website. It's 6 pages. But we do not have a serious black economy problem. And the study that shows that, this Medina Schneider study that was published by the IMF itself, right? That what they state is our black economy is larger than what the Black Economy report states, that's just a difference of methodology. Most important, what that IMF report shows is our black economy has halved since 1991, whereas the Black Economy report that recommended this cash ban makes this outrageous claim that we've measured it at a certain level, and it's our opinion that it's doubled since then, and that's it. It's our opinion. Like, what qualifies them to have that opinion? It's nothing. It's not rigorous. It's just this opinion. So the much more authoritative figure is a halving, an actual halving since 1991, from a already low base. We're the 10th smallest black economy in the world out of 158 countries that were studied. Yeah. And then in comparison to countries that have cash restrictions and countries that use a lot of cash, the cash restrictions do not contribute to eliminate the black economy. In fact, they make it worse. So all the Scandinavian countries that are almost cashless and the European countries that have severe restrictions like they want to legislate here, but even stronger. Yeah. I think Spain has €1,000 limit, France has a €2,000 limit, and Italy has a €3,000 limit. Those 3 countries all have much larger black economies than Australia, whereas Germany in Europe has the highest cash use in Europe. Its black economy is technically larger than ours, but much smaller than all the other economies around it. Yeah. And Japan, which has the highest cash use in the world, has a black economy smaller than ours, right? One of the smallest black economies in the world. So this connection between cash use and supposed black economy activity is bogus. Criminals are criminals are criminals. They will find any way to be criminals, and they can find ways to use digital currency and cards, etc., to be criminals. Yeah. Right? They find all those ways to do it. Cash is incidental to that.
Yeah.
So when they want to crack down on cash, there's an ulterior motive.
So yeah, there's probably a couple of things I'd add to that as well. A lot of the time, whenever you ban something, it actually ends up putting a premium on the price, and we've actually seen that with Bitcoin, particularly in other countries, as well as cash, I'm sure. The other thing that I'm sort of in Australia, we see all this crackdown on encryption and privacy, and if they're monitoring everything to the extent that they claim that they need to be able to, surely that is the solution for cracking down on the black economy and crime. Why do you need to ban cash if you can monitor everyone's messages and whatnot?
Look, if you saw the 60 Minutes story on Crown Casino a month or so ago, they show their footage, CCTV footage of all this cash being passed over the counter. It's on camera.
Yeah.
It's right there. They know it's happening. You don't have to ban cash. You go and investigate the hot spots that, they're using cash to launder money, but that's because it's a laundering, a laundry machine, Crown Casino, right? Go and monitor what the casino's up to. You don't have to ban cash to stop that kind of money laundering. Yeah. And as for real money laundering, don't get me started.
Yeah.
I think it's so outrageous that the author of this report, who made this recommendation, came from KPMG, and he was the only Australian to ever be the global head of a Big Four firm, and they are crooked as, and their whole business model is helping the biggest corporations and banks in the world launder money and evade taxes. They are the black economy. There's a huge global black economy. They run it. Yeah. They help write the legislation for the tax havens where all this is done through, keep everyone's identity secret, etc. And governments, it's like anything. Those Big Four accounting firms are kryptonite to the power of government. Governments come into contact with them and suddenly they're powerless. We can't. It's so difficult to crack down that kind of tax evasion.
Too big to fail. Yeah.
That's right. Too big to fail. And that jerk. I don't want to say anything stronger than that because he's deceased. But I just get mad at him because of the way he wrote his report. He singled out hairdressers, tradies, paying your nanny, paying your lawnmower. And that he said it's the culture that's wrong with Australia, paying those things in cash, right? I'm thinking, how dare you? Who do you think you are? And that's the guy. Not only is the government listening to him, if they adopted his report, when Michael Sukkar introduced it last Thursday, he paid a big tribute to that guy, and so did the Speaker of the House echoed that tribute. They loved him.
Yeah, right? I did see that clip. Yeah. But the thing I want to get to now is the whole reasoning behind this is because the system is getting so fragile, and we're seeing it in the US last week. The Fed are having to shore up the reserves because the whole fractional reserve system, it's just becoming so fragile, and they don't want people to be able to pull their money out of the bank. So at the moment, we're sort of hearing things like, you guys are crazy, John Adams and you guys, because at the moment it's, exemptions for this, that, and the other, but it's a starting point. That's what people have to realize. There's already calls for it to be reduced to 5 and then 2, and then it'll be on not just accounts over $1 million like we see in Denmark. It'll keep coming down if we have to go deeply negative. Is that the way you view it as well?
Yeah, thin edge of the wedge is the right expression for this. And my concern, especially with the way the bill is structured, so that the actual law bans all transactions over $10,000, and then the exemptions, the minister of regulation exempts a bunch of things which can be changed at the whim of the minister. That exemption includes depositing and withdrawing money in banks, right? So at the moment, you can take as much money as you like out of the bank. You can put as much money as you like in the bank. Of course, when there's trouble, people are going to be more inclined to take their money out of the bank, right? And the minister can stop that at a moment's notice. And it's all about, here's the banking system that's been sick for a long time. And instead of reforming it, right, they've got this structure where the central banks are, independent of government, which means independent of democratic accountability. Yeah. So in a crisis, the public can say, like the kind of fury we had at the banks in 2008, right? The government can't do anything because the central banks are in charge of the system, and the banking regulator, APRA, that they collude with the international central banks, centered in the Bank for International Settlements. All those bodies represent the interests of the private banking cartel, right? They don't want any reforms imposed on them. So instead, those central banking authorities are coming up with crazier and crazier ways to try and prop it up. And now we're 10 years past the global financial crisis, and we're starting to, there's been a bunch of hiccups since then, but what we're seeing now is really starting to look like 2007, 8, and the lead up to the crash again, especially that event on Wall Street last week.
Yeah.
And this is going to, people are going to lose their confidence in the banks, and they need to make sure that the extreme measures they resort to cannot be avoided.
Yeah.
The way to do that is you've got to lock people into banks by banning cash, etc.
Yeah, and I know you said at the moment you can get out any amount of cash, but if anyone's actually tried to do that, it's what's it for, where's it from, this, that, or the other, so it is already fairly tough.
Well, actually, no, you're right about that. It's very important to note that is entirely the bank's own policy. Now, I know a person who wanted to test this. She wanted to get $50,000 out. And she said to me, am I going to be restricted? And I said, well, just try it. And very cleverly, she thought, I'm going to go to AUSTRAC, which is the authority that tracks money laundering.
Yeah.
Because they are the people that impose the $10,000 disclosure limit.
Yes.
Right? And that's what the banks claim they're enforcing. She approached AUSTRAC and said, I want to pull $50,000 out of the bank. AUSTRAC didn't care. They were completely casual. They said, no, that's entirely your business, none of our business. All we want is to make sure it's disclosed. That's it.
Yeah.
However, what the bank does is then impose on that its own, I won't say it's illegal, because it's just not, it's not law. It's not legislated. It's its own rules that make life very difficult for people. They make you notify them if you want more than $10,000. And then often, I've had numerous cases lately, people report to me that the bank refuses. They'll say things like, we don't think you're of sound mind, right? Or one person last week reported to me that he transferred money electronically, a sizable amount of money. The bank froze his account because it was an unusual thing, right? But default was freezing his account. Didn't call him or anything, just freeze his account. Everything, he was locked out of everything because of that transaction. And here's the kicker is this, though. If the direction was the other way, Alex, if people were suddenly wanting to put money in the bank, would the bank have those restrictions? No way.
I mean, we see it all the time, Robbie. Anything to do with crypto, they just get their accounts shut down left, right, and centre without reason, even though they're acting within the law and within AUSTRAC and those things you mentioned as well. But let's talk about the derivatives. I know you guys are keeping some data on the Aussie derivatives, and I was pretty shocked at how big they are. But I think it all ties back to why they want money in the system and to prevent money coming out of the system, because the bailouts, it's almost like you have a trading account and you can gamble on leverage, and if anything goes wrong, then you'll be bailed out by the taxpayers. But with all the profits, and this is the thing that irks me the most, these execs and CEOs that are getting paid 300 times the average worker's wage. But then when push comes to shove, we haven't got enough money, we need some more reserves. What about how big the bonuses you've been paying yourselves for years?
Well, and that's been one of the motivation of the banking executives to get into derivatives, because derivatives are very profitable, and so they can and they have this habit that one of the ways derivatives are known to be structured is that all the profits are realized up front, right? And so it can exaggerate the profits the banks are making that year, big bonuses, big bonuses, big bonuses, and then these derivatives often, they have a duration, a year, 5 years, 10 years or whatever, all the profits have already been realized, but got to sit on the books. So the banks, to come up with more profits like that, quick profits, they've got to come up with more derivatives. What we've seen now, so the CECs, I've been at this a while. So I can remember pulling together the first figures we pulled together for Australia was in 1997. We published a chart, which is on our website. And what's notable about those derivatives for the big four banks then and now is they're all under $1 trillion. Because now they're so old school. It's all well over $1 trillion. Yeah. From starting 2012, one at a time, starting with CBA, the banks stopped disclosing their notional principal. So there's a big debate about this. Notional principal is the big figure in the trillions, and then there's this net figure, right? Notional principal doesn't matter. It's only the net figure. Well, that's true until something goes wrong. And when something goes wrong, the blowback is in the big figures, right? Yeah. And that's why regulators and governments should be not letting banks get away with not exposed, revealing their notional principal. Yeah. So now of the big four, only Westpac, and I should even check that, up until now, only Westpac has continued disclosing its notional principal. Yeah. And funnily enough, it's been the laggard of the four, having the lowest derivatives. In the last 6 months, though, this is what you saw, Alex. We've seen growth in the total Australian bank derivatives that were like we've never seen before, something like $10 trillion in 6 months. That's how much it's jumped up from 38 trillion to $48 trillion. Now, this has blown our mind. We just confirmed those figures on Friday. And, when you see, so I don't know what's in there. I'm having a Twitter debate with some person who I notice admits that he used to work for Lehman's, and I don't know why he would admit to that. He's saying, you don't know they're gambling. You don't know they're gambling. Well, I admit, I don't know what the specific contracts are because I'm not in the bank. That's their business. They'll never disclose that.
That's right. Yeah.
When you see growth like that, right? When you see growth, what in the economy? Banks are supposed to reflect the activity, the financial activities of the economy. What in the economy would that reflect? Nothing. And that tells me it's pure gambling. And globally, you're starting to see the same thing. Derivatives shot up from 2000 to 2007 by about $100 trillion a year. And then the crash happened. They've been plateauing since then, but just in the last little while, we're starting to see more growth again in global derivatives. And these are the things that tell us when something like that repo crisis happened last week in the United States, where suddenly one institution, or maybe more than one, but the most likely explanation is someone suddenly needed a lot of money that the market, which is a pretty stable market, didn't anticipate.
Yeah. And for people at home, I just want to highlight the importance of that notional figure that they're not disclosing. If I sell an option or a futures contract and I'm betting that gold's going to go down or that the market's going to keep going up, I only have to put up a small amount of capital, like maybe $10 out of 100. But then when that goes against you, what's the notional value? Well, I owe that person $100, and that's where it gets messy very, very quickly.
Yeah. And it stuns me. This is where the regulators, one of the proofs how captured they are, because this is not rocket science anymore. We've had enough bad experience with derivatives that everyone should know this, yet the regulators still let the banks get away with that. And a funny story, Alex, so I work quite closely with a former APRA researcher, Dr. Wilson Sy. He comes with me to Parliament to help talk sense to politicians. He also worked at ASIC, and he was at ASIC in the early 2000s, where ASIC was saying, okay, these derivatives are serious. We better try and see what we have to do about them. First, we have to define what they are. And they spent a year, I kid you not, a year trying to come up with a definition for derivative and gave up.
Okay. It doesn't surprise me.
These are the people that are supposed to be watching the health of the financial system and keeping an eye out for us, and they just don't.
And this leads into my final question, which is something that you guys have been pushing for, and the GlassSteagall Act. And basically, for people at home, it's to separate the good banking for people that are just getting mortgages or taking out business loans or whatnot. Separate that out away from all these derivatives and speculation and bailouts. So if something bad happens, the everyday person's hopefully not going to be affected.
There's a firewall. That's what you're putting up.
Yeah.
They're actually the people the banking experts who advocate Glass-Steagall make a fundamental point. They're fundamentally different types of banking, right? So normal banking is you put your money in the bank and in trust. The bank lends money, right, for activity in the economy, but to businesses, to homeowners, etc. All normal stuff. Yeah. And that financing with deposits, those deposits are, in a sense, sacred. That's on trust, right? And banks took that seriously, especially after the big crises in the 1890s and then the Great Depression. It became much more serious. Until recently, actually, that's what deposits were regarded as.
Yeah.
And then investment banking is a totally different beast, right? It is taking a risk, and it doesn't mean there's not a role for investment banking. There actually is, but you want to make sure that you're not gambling with other people's money. Yep. Right, or the people who want to invest in your investment bank, it's the gambling law. You only invest what you can afford to lose, yep. Right? Well, deposits don't come into that. That's a different thing. People do that by trust. But when you mix the two, and this is what the big discovery was in America in the Great Depression, when you mix the two, then those risks that banks take in the investment banking area, they're taking more risk because they get to use deposits as a fallback. Right, that puts your deposits at risk. And they said, okay, after 4,000 plus banks crashed between 1929 and 1933, they said, okay, no, we've got to separate these two. And it was the GlassSteagall Act that was passed in 1933 and repealed in 1999. 66 years it was in place. Yeah. I would call it the single most effective banking regulation in history. It wasn't repealed because it didn't work. It was repealed because it did work. Yeah. Right, it was cramping their style right? They're like, these speculators taking over Wall Street. And one of them, and the best example is Sandy Weil. I'm not sure. He was the head boss of Citibank. So he's the guy that for Citibank wanted to merge with Travelers Insurance, and he was actually the boss of Travelers. And so they spent $300 million lobbying Congress to have this law repealed so they could merge together. Yeah. And they succeeded. And he got a big plaque called the Shatterer of Glass-Steagall, this guy, Sandy Weil. And they went nuts, right? The speculation they were able to engage with, funded by deposits now, the massive deposit base of Americans, just went through the roof. And when it all came crashing down and everything went pear-shaped and they had to be bailed out, and who had the biggest bailout? Citibank, right? The single biggest bailout was for Citibank, the bank that had started the rot. Sandy Weil himself and his co-chief executive came out in 2012 saying, we were wrong. This was a disaster. We need Glass-Steagall back. And, if people like him can acknowledge that, in fact, a lot of ex-bankers acknowledge it. A lot of people that we work with acknowledge it. The only people that don't tend to acknowledge it are the current crop of bankers who don't want to be cut off from that ability to gamble with other people's money, and the politicians that basically are their stooges. So we're trying to get this law passed. We've had a big fight, but when we look at policies like the cash ban, negative interest rates, bail-in, where you can take deposits to prop up banks now, all these things are the anti-Glass-Steagall approach, right? Where they put the interest of the system above the functioning of the economy and the interests of people. Glass-Steagall constrains the system so that the people's interests are preserved.
Yeah, and the final point I wanted to sort of talk about was, if this all happens in Australia, and it doesn't take a global crash or anything, it can just be a bit of a slowdown and interest rates are probably going to go to zero or negative. If we get QE, then I think we're going to have the same sort of gambling on Wall Street. I think our stock market, I think it's going to push up asset prices. So I think actually they could blow the housing bubble bigger. I think that the stock market in Australia is going to go mad. And that's when I think these derivatives are going to go even more exponential, and it's going to be exactly like what has happened in the US.
And that's right. And it's always kicking the can down the road. But every time they make that decision to do that, there will be an inevitable crash. It's just going to be much worse than it otherwise would have been. And that's what we're facing. So we have a window of opportunity now. We're quite thrilled, frankly, with how this fight against the cash ban is going. Right? I mean, your and my discussion is an example of it. Right? People are paying attention. When a government starts going this far, overreaching, suddenly a lot of people who knew there was a vague problem, but a lot of questions come up, and people start wanting to know, what might be motivating this. And so these people, we told people make submissions to the Treasury, and they did in their droves, 4,000 plus submissions. We've now got an inquiry into this law, and this is we've got the inquiry because the Labor Party supported it, and it's not often that, to be honest, that Labor does the right thing like this. They're often too willing to roll over when it comes to, because if they get accused of being upsetting the financial stability, because that's the sort of line the government will use, right? Oh, Labor's upsetting financial stability. This is why we're doing this kind of law. Yeah. Labor wilts. But this time they did the right thing. We've got a proper inquiry. Yeah. And that inquiry can air everything we just talked about, right? And if we can stop this, we can start, pushing the tide back a bit of all this rubbish and recruit the public to this fight and actually start getting the kind of reforms that we need.
Fantastic. Well, we'll put all the links to all your work down below in the description so everyone can support you and follow your work, Robbie. But thanks so much for coming on. Any final thoughts for people at home, or we've discussed it all today?
Oh no, I think we've discussed it all. There is just as we discussed, there is an urgency in terms of the way the financial system's functioning, right? So, but I like to encourage people, as you probably heard me on Martin's show, I do a lot of liaising with politicians, a lot. And when you're there, they're ordinary people. There's a certain small cohort that, I know are pretty corrupt. But the majority of people, they just don't have enough time. They kept distracted by all kinds of things. I remember the one time I was in Parliament, and Barnaby was in trouble with his girlfriend, right? And half my meetings cancelled because all these politicians went to ground. They're just defined by what the media says all the time, right? Yeah. And so you, the constituent, have to work hard to get their attention. Don't interpret how hard you have to work as the system being broken, right? I mean, there is a lot of problem with the system, but it's just a reality of life. But if you work hard and make phone calls, We're inviting people to come to, contact the CEC if you want to be part of a delegation. We're setting up delegations in each electorate. People can join those to go see the Member of Parliament to protest this cash ban. Those things will get through to them, right? Now they'll still be subject to the dirty deals behind the closed doors, and a lot of pressure. But if they when they're behind closed doors, if they can say to their party rooms, hey, the pressure we're feeling in here from the banks, from Treasury, et cetera, to ram this law through, frankly, it's not as great as the pressure I'm feeling from my community.
Yeah.
Right. That's when you start to be able to get progress. So that's what, don't give up. Do those things. Contact us if you want to do it. I'll give Alex the website. If you're into Bitcoin, you want to make a donation, feel free. It's on our website. Muchly appreciated. We do a lot of work here to compile this information, disseminate it, get it out, and all those things can have a cumulative effect, and this is one I'm thinking is looking quite positive.
Fantastic. Well, good luck with it all, Robbie, and thanks for tuning in today, guys.
Thanks, Alex.
Cheers.